Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty as well as the different asset classes. Now first of all let us discuss what we have mentioned in our last video. In our last video we mentioned that the markets where the momentum was positive and market were likely to trade positive throughout the week. Yes, last week was a truncated week, so we had a view that any dips should be used as a buying opportunity. So market traded positively throughout the week, but on Friday we have seen some sort of profit booking coming in at the higher levels, and but on the weekly basis, market ended on a positive note. So definitely the momentum still remains to be positive at this juncture. But yes, in the last couple of trading sessions, maybe to 10 trading days, we have seen that markets have rallied sharply on the upside. So there could be some sort of consolidation or sideways movement for the market. But the overall undercoat tone of the market remains to be positive. So without wasting any time, let us go to the Nifty daily charts and we'll try to figure out what could be the trend for the next week. And we'll try to figure out what is the setup. Now let us go to the Nifty daily charts. On the Nifty daily chart, Nifty has been moving in an upward rising small channel, which I will show you. Uh, Now this is the Nifty daily chart. So let me draw a parallel channel so that we will have a clear view regarding the particular upward rising channel where Nifty has been moving. So this is the moving channel, and you can clearly see that Nifty has been moving, making higher tops, higher bottoms in this particular rising channel, and this is the daily charts. So let us see what is the setup of the weekly charts. So on the weekly charts also you can clearly see here that the markets has been moving in this particular well defined channel, and on the weekly basis the candle is very strong, and the closing is also strong. So this clearly indicates that the undertone of the markets is quite bullish at this juncture. Yes, we might go into some sort of consolidation or some pullback, but at this juncture uh, we don't see any kind of major correction coming in until and unless Nifty sustains above almost 19,500 mark. So now let us discuss the important supports and resistance level in Nifty for the next week. So for the next week, you can clearly see the trend is positive. So the important support in the Nifty are placed at 19,627 is the first support. Below that, the second support is placed at 19,547, and below that, the third support is placed at 19,414. Whereas on the upside, the first resistance is placed at 19,857. Above that, the second resistance is around 20,050 mark, and above that, the third resistance is placed around 20,133. So these are the important supports and resistance level in Nifty for the next week. Any dips should be used as a buying opportunity. Traders should just try to watch out these levels and trade accordingly in a direction of the breakout or direction of the primary trend. So friends, now let us discuss the derivative data of Nifty calls. You will see on the screen the derivative, the Nifty call data. In Nifty calls, you can clearly see the action was seen in 19,800 calls, then 19,900 calls, 20,000 and 20,100 calls. Now you can see there has been a slight drop in the option premium. There has been a rise in the open interest. There has been a rise in the volumes. There is no sign of shedding yet in any particular strike prices. But basically, on immediate basis, 19,800 could act as an immediate resistance because the strong open interest and volume concentration is being placed in that particular strike price. So if Nifty breaks and closes above 19,800 mark, definitely Nifty has potential to test the levels of 20,100 in the next week. So at this juncture, the data is positive. The implied volatility is low. It is between 9.77 to 9.83. So definitely this data seems to be positive, at least for the next week. But yes, Nifty needs to close above 19,800 for this extension of the rally. So friends, now let us discuss the Nifty put data. You will see on the screen. In Nifty put, the action was seen in 19,700 puts, 19,600, 19,500, and 19,400 puts. Now here also you can see rise in the volumes, rise in the open interest. Impact volatility is still low. It is between 8.98 and 10.42. Uh, the option premium is flat, slight to positive, positive to sideways, or slightly negative. But Nifty put data is also seems to be quite positive at this juncture. So definitely looking at this particular strike price of 19,700, where the open interest and volume concentration is high. So on immediate basis, if Nifty breaks and closes below 19,700, then there are chances that Nifty might drift down to the levels of 19,500 odd mark. And as I said, 19,500 could act as a strong support. So if this happens, if there is a pullback, that is the area where one should try to go long at the lower levels uh, near 19,500 mark. But until unless Nifty sustains about 19,700, the trend would remains to be positive. And if it crosses 19,800, then we might see the extension of rally towards the level of 20,000 to 20,100 mark. So this was the Nifty data, Nifty analysis. Now, friends, let us directly go to the Bank Nifty daily charts. So, and we'll try to figure out what is the trend or what is the pattern which has been developed, formed on the Nifty Bank Nifty daily charts. A similar kind of move was also seen in Bank Nifty. You will see on the screen. Now, this is the Bank Nifty, but last week we have seen that there was a statement from RBI regarding the unsecured loans, and on the basis of that, there was some negative news, or market has taken that thing in a negative way, and you can see that Bank Nifty has corrected sharply after that particular news, and Bank Nifty opened on a negative note on Friday, and it traded week through on a weak note throughout the day and ended on a negative note. You can clearly see the rising channel is also being breached, and Bank Nifty has closed way below the breakout level on the downside. So slightly Bank Nifty seems to be slightly weak, but it has taken a support near the multiple, or it has taken a pause near the multiple support area of 43,500 at this juncture. On the daily charts, Bank Nifty has formed an inverted hammer with long shadow. So still the trend remains to be slightly weak, but again, as I said, 43,500 is the strong support, multiple support zone. So we need to check on Monday that how this particular level is been defended by the bulls at those particular levels. So this is the daily chart. So let me see the weekly charts so that we might see a larger picture in Bank Nifty. Yes, in larger picture also seems to be slightly weak. You can clearly see it is a inverted hammer with an upward shadow, but still, as I said, 43,500 could act as an immediate support at these levels. So we would watch out for this particular support area. Uh, so friends, let us discuss the Bank Nifty supports and resistance level for the next week. So first support in the Bank Nifty is placed around 43,283. Below that, the second support is placed at 43,023, and below that, the third support is placed at 42,000. This is a mistake from my side. It is 42,589 on the downside, which is the third support area. On the upside, the first resistance is around 43,872 is the first resistance. Above that, the second resistance is around 44,161. And above that, the third resistance is around 44,444. So these are the important supports and resistance level in Bank Nifty for the next week. Bank Nifty might trade slightly weak because of the weak closing at this juncture, but we would see that 43,500. If that level is defended by the bulls, then we might see a counter rally or a bounce back rally. But if it breaks those levels, then we might see further sell off or further follow up selling and we need to check out where it will or it might take a support on the derivative data. So without wasting time, let us discuss the derivative data of Bank Nifty calls. You will see on the screen the Bank Nifty calls data. In Bank Nifty calls, the action was seen in 43,800 calls, then uh, 44,000 calls, and 44,500 calls. Now here you can see there has been a significant drop in the option premium. That means when we have seen that last on Friday, Bank Nifty has dropped significantly, that the smart money has already into writing the out of the money calls. There has been a rise in the open interest, rise in the volumes. But the most important thing is implied volatility has entered in the danger zone. It is between 12.54 to 14.41. So if there is further weakness, then implied volatility might go into in a danger zone, and then from lower levels, we might see some sort of bounce back coming in the later part of the day. So we need to check out that the levels in the next week. So on immediate basis, 43,800 could act as an immediate resistance. If it breaks, then there are chances that Bank Nifty might rally towards the level of 44,400 to 44,500 in the next week. So data seems to be slightly weak, but the implied volatility is slightly higher. So if there is a further weakness, then IVs might go into danger zone, and then we might see a bounce back rally at the lower levels. So, friends, now let us discuss the Bank Nifty put data. You will see on the screen in Bank Nifty puts, the action was seen in 43,500 puts, then 43,000 puts, and 42,500 puts. Here you can see there has been the option premiums are positive. That means the smart money might have bought out of the money puts. Impact volatility is also in a higher zone or danger zone. It is between 14.73 to 15.08. There has been a rise in the volumes, rise in the open interest. On immediate basis, 43,500, as I said earlier, looking at the charts and looking at this derivative data, 43,500 could act as a major support because the volume and open interest concentration is strong over there. If it breaks, then there are chances that Bank Nifty might further drift down to the levels of 43,000. And from 43,000 levels, we might see a bounce back coming in at the lower levels. But looking at this particular data and charts, we feel that Bank Nifty might further trade slightly weaker, and we need to watch out the support area. And if it supports at the lower level, if it consolidates, and when it breaks the consolidation range on the upside, then only one should try to go long at the higher levels. If when it breaks the consolidation range on the upside. So definitely at these levels, Bank Nifty is slightly weak. Nifty is weak. There is a contradict view. Nifty is looking bullish, but Nifty is looking slightly bearish. So next week, it might be tricky for the traders to trade in Nifty and Bank Nifty. But I don't think so. If people or traders uh, trade according to the levels or support or resistance level, I don't think there could be difficulty in identifying the trend in the next week. Yes, but the trend next week trend would be slightly tricky, so one needs to trade with strict stop losses. But overall, looking at the data of Nifty and Bank Nifty, overall view remains to be bullish. Any dips should be used as a buying opportunity. So, friends, now let us go come to the final segment of our show, which is positional call and identify one stock. The name of the stock is Marico. So, let us go to the daily charts of the Marico industry. The stock has given a breakout of a falling wedge on the daily charts, and the stock is poised for an upside rally from these levels. So let me draw this particular wedge, falling wedge, so that we will have a clear view regarding the pattern. And particular setup, the stock has formed an engulfing bullish pattern on the daily charts. The volumes are also slightly slowly and gradually rising from these levels. And if we combine or if we just uh, watch out the charts, you can clearly see the stock has been moving in this particular broad band in since a very long period of time. Now, looking at this particular setup, we feel that it is bullish at this juncture. The price volume action, you can clearly see the volumes of last three trading session has already been on the upside. You can clearly see this thing. Stock has given a wedge breakout at this juncture. So, and the stock has also formed an engulfing bullish pattern at these levels. So definitely the stock has potential to give a decent rally. Yes, this is a defensive stock, so we might not get a rally on a which could be fast in the upside. This rally could be slowly and gradual. So investors, uh, long-term investors, positional traders, swing traders can buy this stock on dips to 522 for an upside target of 563 in short to medium term. So again, I would like to repeat the levels. Long-term investors, short-term investors, swing traders can buy the stock on dips to 522 for an upside target of 563 in short to medium term. Short to medium term would be a time horizon of almost maybe around 3 to 4 months, because this is a defensive stock. It will move slowly and gradually on the upside. So one needs to keep patience. But at this level, the stock seems to be positive. So, friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.